Okay, but it seems like Nvidia is still the main source of tension. Perhaps this will change given Apple's records, but for now, the commentary is focused on semiconductors. I believe that Nvidia is still the main focus of attention, and analysts are still offering their opinions after the split. After a very successful 2024, Argus increased the company's price target to $150 from $110 and maintained a buy recommendation on the shares, stating that Nvidia is well positioned for further momentum in 2025. Anders still have a long way to go. The company says it wants to develop beyond AI and data centers. In addition, a note from Oppenheimer, who reiterated that performance moved him to $150 from $110, stated that they see Nvidia as the best positioned in AI, benefiting from their full stack of AI hardware, networking, and software solutions, as other companies in markets including gaming, professional visualization, and automotive also accelerate. The analyst also increased his full-year profits predictions for 2024 to $2.62 and for 2025 to $3.32 after the separation, citing multiple structural tailwinds that they believe would fuel the long-term disproportionate top-line development of high-performing gaming data centers, autonomous driving, and AI. It is evident that we have witnessed the stock reach a market capitalization of $3 trillion. Even with the fierce run of Nvidia stock, analysts continue to express support for the chip giant. The company's most recent strong endorsement comes from Evercore ISI, which raised its price target to $145, implying more than 20% upside. And that's not even everything. We saw that last earnings report, where revenue was up 262%. Data center revenue, grew 427%, coming in at 86% of their total revenue, and even gaming was on the rise, up 18%. The numbers have come in really well for NVDA. They continue to do so, and analysts, investors alike seem pretty optimistic about this AI boom. Though it wasn't much of a dip this morning, Nvidia is trying to buy the dip, and anytime there is anything, it usually gets scooped up like did yesterday, so price targets moving higher. Don't imagine that will scare anyone off AMD, though, as it is still down. You think that's because people don't need it as a cheaper proxy anymore? Or is that just because no one is showing AMD as much love on the analyst side? I believe that there isn't as much love being shown to AMD, so it's a little bit of both. It's evident that Nvidia is the market leader in this area, particularly in AI, where it controls approximately 90% of the market. Additionally, gaming accounts for 10% of Nvidia's revenue, making it the company's second largest market. Analysts and other observers have expressed high expectations for the future growth of graphic cards used in computer gaming, with Nvidia predicting that this trend will continue, with GPUs expected to make a comeback in the second half of the year and beyond. Nvidia could potentially increase its revenue in this area and face competition from firms like AMD. Challenges for a company like Nvidia today include AMD, Intel, and other names that are growing in competition. There are also some issues in China, and there are these high expectations surrounding AI chips. However, at the same time, their data center is growing at a rate of more than 200% year over year in these quarters, and the supply is still somewhat constrained, so I think that's a real positive. Additionally, the fact that their A100 chips are almost sold out and that they can't produce enough of them to meet demand is something that investors are likely excited about. The upcoming release of the Blackwell chips. What kind of outcomes should we anticipate from them? Evercore strategist Julian Emanuel claims that previous Tech stock splits have always involved rallies followed by sell-offs and volatility. This volatility has the potential to repeatedly reset generational buying opportunities. Citing other businesses that have benefited from technological revolutions, such as Amazon, Emanuel speculates that there may be more bullish enthusiasm surrounding the Nvidia stock split, not just because of the increased accessibility for retail investors, but also because Nvidia, like Amazon, may fundamentally change the way businesses operate in its core industry. However, this may be a difficult pill for some investors to swallow. However, it's important to remember that part of the bullish argument is that 4 years ago, Nvidia concentrated on the gaming industry, and as a result, the sector's total sales grew from $7.98 billion in 2000 to $19.7 billion in 2009, translating to a compound annual growth rate of about 10%. Today, Nvidia is focusing on artificial intelligence, AI, which has the potential to generate revenue of over $1.81 trillion by 2030, translating to a compound annual growth rate of 36.6%. Given these facts, it's likely that Nvidia will continue to dominate AI, just as it did gaming, which will be beneficial for the company due to the larger market for AI. We can conclude that Nvidia stock is still priceless even though it traded at a lower price following the split. So let's speak about the company's incredible fundamentals, which should have investors snapping up the stock. There are still methods to be implemented and roads to be taken. So if you're feeling positive right now, let me know what some of the catalysts are. Why are you optimistic about 2024? The main reason we're bullish, in my opinion, is that despite everyone's concerns about value, the large companies, the so-called Big Seven, are exceeding forecasts and beating earnings, among other things. However, if you look at the valuation 6 months ago, a year ago, or 3 years ago, it looks actually fairly cheap right now. If you consider that over the last 3 years, those stocks have increased operating earnings by $150 billion, and their cash has increased from $150 billion to $200 billion on a combined basis. They also have more debt, but if we took free cash flow, they could pay off their debt in less than a year. Based on this, I don't think there is much reason to be concerned about large or prolonged drawdowns. It's a good place to be, and yes, there have been the typical 5 to 10% pullbacks in price. However, given the company's undeniable leadership in AI and its potential for exponential growth, I think Nvidia stock is a worthwhile long-term investment. On May 22, the company released yet another set of astounding Q1 results, driven by robust continued computing and accelerated generative AI demand momentum. Nvidia's adjusted earnings of $6.12 per share easily outperformed the $5.60 consensus forecast and were 461% higher than the $1.09 per share fiscal quarter 1 2024 number. Finally, Nvidia's crown jewel segment data center revenues soared 427% year-over-year to $22.6 billion. This segment accounts for 86% of the company's total revenue. Looking ahead, the Q2 guidance appears promising with revenues expected to be around $28 billion ahead of expectations. Despite this, adjusted gross margins are forecast to be around 75.5% versus 77% projected for Q1 3 months ago. Impressively, H1 revenue jumped 262% year-over-year to $26.4 billion. Surpassing the consensus estimate of $24.59 billion. Additionally, its adjusted gross margin expanded 13.8 percentage points to an unbelievable new high at 78.4% from 64.6% a year ago. Nevertheless, with gross profit margins of 50.6% and 41.5% in the last year, respectively, it still remains far ahead of chip manufacturers like AMD and Intel. This shows that Nvidia can continue to beat earnings expectations while staying ahead of the competition, and all of this is positive for Nvidia stock. If you made it this far into the video, thank you. These videos take a lot of time and effort to make, so if you enjoyed them, please hit the like button and subscribe to the channel. Like this new trading week will start out somewhat mutedly, with the Dow, S&P, and Nasdaq all falling by a tenth or two. When asked how high do you see it going after the split, Keith Fitzgerald said, "A lot more people can get into this now conceivably that it's a tenth. 10 a hell of a lot cheaper than it was." Well, I love this business because that's absolutely true. It means the psychology has changed, the accessibility has changed, and the price has changed. Nvidia's 10-for-1 stock split takes effect at the opening bell, and you say there's still plenty of upside from here. This business is expanding at a rate of 250, 260, and 270% annually, and its earnings are up 450% compared to those of other enterprises. For the foreseeable future, the company's largest clients will purchase every chip it produces, and enhancements are already being implemented. Rubin and Blackwell investors should continue to be optimistic about Nvidia since the firm is pursuing innovation in the AI field, which will enable it to sustain its leadership position in the worldwide market. Nvidia's most recent GPUs are supported by both its hardware and software capabilities. Continue to lead the AI sector and be the go-to option for high-end computing data centers globally. Instructions for Nvidia greater pricing power, in addition to the fact that artificial intelligence's scope and expansion are expanding rapidly, and that demand is clearly outpacing supply. Nvidia's CEO, Jensen Huang, stated during the company's Q1 earnings call that generative AI has expanded beyond cloud service. Providers to include consumer internet companies and enterprise customers of sovereign AI in the healthcare and automotive industries are generating several multi-billion-dollar vertical markets. Additionally, Jensen unveiled Nvidia's most recent AI architecture, Rubin, during the Computex convention in Taiwan. Rubin is anticipated to arrive in 2026. Less than 3 months after the business unveiled its Blackwell platform, which is intended for high-performance artificial intelligence and scientific computing. Blackwell, which succeeded the Hopper platform, which was optimized for AI inference and training and launched less than a year ago. While Hopper continues to see strong demand, Jensen announced that Nvidia will launch a new line of chips every year, instead of its original plan to release new chips every 2 years. This accelerated pace of innovation has allowed Nvidia to retain a 70% to 95% market share in the AI chip market, according to estimates from Mizuho, even though competitors like AMD and Intel are launching their own new AI chips at lower prices. We will continue to purchase Nvidia stock at current levels despite some critics' warning of waning demand after the initial wave of AI installations, which we believe is at least several quarters away. Because of Nvidia's early adoption of AI technologies, AMD and Intel lag significantly behind. Nvidia has climbed to become the second most valuable stock in the world with a market cap of $3 trillion, an unbelievable leak from just under $100 billion less than 5 years ago. The company continues to enjoy a sizable market share in the AI industry. Nvidia stock is still a good investment as a result, but do you believe it's a good one at the current price? If you would like to know what firms like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. We'll see you there. Please share your opinions with us in the comment box. Don't forget to tell us what your valuation is for NVDA. As we wrap up this video on the surprising insights from Evercore Analysts about Nvidia stock, it's evident that Nvidia continues to capture the market's attention with its innovative advancements and strategic moves. The analysts' predictions highlight the potential for significant growth, driven by Nvidia's leadership in AI, gaming, and data centers. These sectors are not only booming, but also essential for the future of technology, and Nvidia is well-positioned to capitalize on these trends. Investing in the stock market always involves a degree of risk, but understanding the factors behind these predictions can help you make more informed decisions. Evercore's confidence in Nvidia's potential underscores the importance of staying updated with expert analyses and market trends. If you're considering investing in Nvidia, now might be the time to delve deeper into their financials, market position, and future prospects. At Investing Tutorial, our goal is to provide you with valuable insights and comprehensive analysis to support your financial decisions. By staying informed and educated, you can navigate the complexities of the stock market with greater confidence. Remember to diversify your portfolio and consult with financial advisors to tailor your investment strategy to your individual needs and risk tolerance. Thank you for watching, and stay tuned for more insightful videos from Investing Tutorial. Here's to making informed and successful investment decisions.